Welcome back. Now, the Organization of the Petroleum Exporting Countries are holding their meeting today to debate how to tackle a global glut of crude. The general consensus has always been that OPEC is likely to extend production cuts for another 9 months. But what will this mean for Nigeria's domestic commodities market? I'm being joined now by an investment analyst with financial derivatives company, Ada Akonobi. Good morning, Ada. Thank you very much for coming in spite of the rains.
Good morning, Timothy.
Good to have you. Now we have seen oil prices climb to, above $50
Yes.
Per barrel, and that was since the strong indication that OPEC is likely to extend this production cut deal for another 9 months. If that happened, what would this mean for Nigeria's domestic market?
Well, there'll be no immediate impact on the domestic commodity market anyway. But the thing we have to watch out for is if our production goes back up to 2.2 million barrels per day, and if oil prices stay above 54, like you said, like you rightfully said, the OPEC and non-OPEC members are coming together to meet in Vienna to discuss the potential extending the oil policy cut for another 9 months. So it seems like everyone is on board, and they are looking to, curb the excess supply that we've had in the market for so long. So that's the good news. If they come to an agreement, if oil price is steady above $55 per barrel, and if our production, go above what its rate, at the end of the day, we'll see some accretion in our external reserves, and the CBN will begin to support the naira, which eventually will trickle down to the price of commodity items with import content.
Now, talking about production going up 2.2 million barrels per day, presently with the current agreement, Nigeria has been excluded from the production cut.
Yes.
And there's every possibility still that they might be included if they perhaps decide to extend this deal. If that happens, what then happens? How would that impact when we are targeting 2.2 million barrels?
Well, so far, the latest OPEC report showed our production was 1.5, up from 1.4 the previous month. So I'm not sure we're up to our target just yet. But if we get up to our targets, we'll have to go back to the drawing board, and Nigeria have to be, they'll have to do some sort of evaluation. You've come up to your target and you're somewhat contributing to the excess supply that we're trying to curb, then they might have to tell us to cut back our production. But for now, we haven't reached our target, so I guess we'll still be at the mercy of OPEC.
Now let's look at the downstream sector, the petroleum prices and all of that. Yes. We have seen diesel price, of course, come down. With all of this and with the prices of the trend of global oil prices that's going, what do you see happening to our petrol prices?
Well, the petrol prices are actually 145 naira per liter, but then oil prices are going back up to 55, about $54, $55. So what may happen if this is sustained? They'd have to go back to the pricing template and see, because when we set the prices for 145, oil prices were about $30, but now oil prices are back up to 54. There's a possibility of going up to 60 because Saudi Arabia is really desperate to see oil prices rebound back to 60. So what will happen is that's putting a lot of pressure, and as we know now, NNPC is the sole distributor of petroleum products. Other distributors are actually finding it very difficult right now. But the good, regardless, on the positive note anyway, our forex, our exchange rate is a bit stable, but then oil prices, the whole logistics is a bit difficult for them. So they might have to go back into the pricing template and see what they can do. But for now, I don't think the NNPC is looking to adjust prices upwards, because that's going to hit heavily on the consumers, seeing that we have very little money to spend, and talk more of increasing oil price, petroleum prices.
Now, for the OPEC members, we have Russia, we have Saudi Arabia, yes, that have actually agreed that it could extend the prices. But then the major concern has been, is it possible that other members would also toe this line? Do you see them actually coming to this consensus to have this extension done?
Well, so far there's been a 90% compliance anyway, so they have kept to the deal. And like I said, they're coming to review what has happened in the last 6 months with the possibility of extending this further to 9 months. So far, Saudi Arabia is on board, and they're the largest producer within the OPEC organization. Russia is on board because the major concern was, would Russia actually want to be a part of this? So far they're on board, and it's only natural that other members will be on board. So far so good. OPEC and non-OPEC members are on board, and they're looking to, you know, cut down production by 1.8 million barrels per day, with the possibility of reducing it to about 2 million barrels per day, but that is still up for talks. But then the threat still remains the U.S. producers.
Yeah.
But however, it's important to note that the oil prices have actually factored in the U.S. shale, rising U.S. shale production anyway. So even if they don't come to an agreement, I don't expect to see a massive decline in prices. Prices will still stay stable. But so far, there's positive sentiment. The market is actually anxiously anticipating the final outcome of the meeting, and so far there will be a possible extension of this oil cut policy.
So do you see the oil prices remaining above $50 per barrel?
Most definitely. Like I tried to point earlier, Saudi Arabia is really desperate to see prices go, you know, they expect average oil prices for 2017 to be $60 per barrel. So with all these members on board, I'm not sure when that's going to be, but for now we expect prices to be above, you know, to still stay at 50, 55, but with a range of, you know, possibly extending further, pending on the outcome of the meeting today.
All right. Thank you very much, Ada, for your time.
Thank you.
Let's just hope that they reach an agreement to actually extend. Perhaps that could have a positive impact on our domestic prices, like you mentioned earlier.
Yes, and again, even if they increase prices, or even if they come to an agreement to extend the oil cut policy for that, we have to understand that it to take an average of 18 months for the excess supply glut that we have anyway to finally, you know, wave off. So there's still other factors and considerations we have to keep in place. But so far, December last year was when they had the first meeting. They're having another meeting now, and we knew the outcome of the meeting, we knew what happened to oil prices when they came to an agreement. So we expect, you know, that to positively affect oil prices as well.
All right. Thank you very much for your time.
Thank you. Thank you.
Right. Let's quickly take a look at the performance of the oil